Texas is known for wide-open spaces, booming suburbs, and real estate megadeals. But what if the next big property story in the Lone Star State isn't skyscrapers or new housing developments? It's a tiny collectible toy named Labubu, sold by Pop Mart International Group, lining up crowds, rewriting mall tenant strategies, and forcing Greg Abbott into a corner. A brand from China, a governor banking on retail growth, and suddenly tracts of shopping space are riding on mystery boxes. But here's the kicker. Is the boom real? Or is it about to collapse? Welcome to Estate Scope, the channel where we expose the hidden forces shaping today's real estate markets. From climate risk to insurance pullouts to overlooked government policies, we break down what's really behind the headlines and what it means for your investments, your home, and your future. If you're into real estate with a twist of investigative reporting, hit like, tap subscribe, and ring the bell icon so you never miss a story that could impact where you live, what you buy, or how you build. Now, let's get into what might be one of the most overlooked real estate catastrophes of the decade. Is Labubu. Labubu is that odd little plush figure with huge ears, sharp teeth, and a cult following. Created by Hong Kong artist Kasing Lung and produced by Pop Mart, it launches in blind boxes. You don't know exactly which version you'll get until you open it. That surprise, the collectability, the social share moment. Together they drive repeat purchases and viral demand. According to Time magazine, Labubu and the Monsters IP line generated 3 billion renminbi, approximately $419 million in 2024, up a staggering 726.6% year-on-year. The story of a toy seeming trivial becomes a brand strategy, a retail phenomenon, and now, a real estate play. The blind box boom. What drives the craze? The blind box model. Pay approximately $20 to $30 for a sealed box. You don't know which character you'll get. Some figures are rarer than others. This mystery fuels repeat buying, social media unboxings, and a resale culture. For instance, plush toys in Pop Mart's 2024 product mix exploded by 1,289% year-on-year and accounted for 21.7% of total revenue. Analysts say the appeal isn't just toys, it's emotions. One dataset said, Pop Mart's brand and IP recognition rose sharply, driving global expansion and a record growth year. This kind of consumer energy grabs attention, and for mall owners, that attention means foot traffic. Pop Mart didn't stay online or in China alone. The brand began rolling out physical stores, robo-shops, vending machine-style pop-ups, collaborations, and IP drops. These are not just retail outlets, they're destinations. For landlords and shopping center owners, that means one tenant can tilt the traffic mix in a big way. Internationally, Pop Mart had over 500 stores in 30-plus countries by 2024. So, what seems like a toy story becomes a story of how retail real estate is evolving. From outlets of transactional products to immersive experiences that drive dwell time, shareability, and social media content. Why Texas matters. Texas is booming. Rapid population growth, strong job creation, large suburban malls, and major relocations all combine to make it fertile ground for new age retail. In Dallas, Houston, the Woodlands, Frisco, and other markets, landlords are looking for tenants that can revive or sustain foot traffic in an era when e-commerce continues to bite. When a brand like Pop Mart chooses Texas, it means more than just a store. It means strategic positioning in high-traffic real estate nodes. Pop Mart already lists a U.S. address, 13,350 Dallas Parkway, Suite 3475, Dallas, Texas, 75240. Frisco, Texas, is home to a Pop Mart store opened August 24, 2024. And Houston's Baybrook Mall got its fourth store in mid-May 2025. This isn't theoretical. it's real estate happening. Governor Abbott's economic vision, Texas, has always branded itself as a business magnet. Low taxes, fast permits, and fewer regulations. Governor Greg Abbott often says, Texas isn't just open for business. We are the blueprint for it. That message has drawn companies like Tesla, Oracle, and Samsung. But lately, another name has quietly joined the list: Pop Mart International Group. When Abbott spoke at a 2024 press event about retail innovation in the state, he emphasized how global creativity meets Texas opportunity. Though he didn't name Pop Mart directly, his office later noted that the expansion of international specialty retail brands was a key signal of the state's consumer confidence. That's how Texas ended up as one of the first U.S. states to host the viral Labubu phenomenon, a move that turned heads far beyond the toy industry. Pop Mart lands in Texas. On August 24, 2024, Pop Mart officially opened its first Texas store inside Stonebriar Center Mall in Frisco, just north of Dallas. It wasn't just another store opening. By 7 a.m., over 1,200 collectors had already lined up, some from neighboring states, to snag exclusive Labubu Have a Seat editions. Local media reported the scene looked more like a sneaker drop than a toy store launch. According to VMSD magazine, Pop Mart described the location as an immersive IP experience, not just a retail outlet. Fans were greeted by walls filled with glowing displays, a massive Labubu statue, and the signature blind box vending machines known as robo-shops, part of Pop Mart's automation push. Governor Abbott's office reposted local coverage on X, formerly Twitter, praising Texas's global retail leadership. But not everyone was celebrating. Some real estate analysts were already asking, can this level of hype translate into sustainable lease revenue? The store model and real estate yield Pop Mart stores are deliberately compact, averaging less than 1,200 square feet, yet generating foot traffic that rivals multi-brand apparel stores 5 times the size. That's gold for mall landlords. The Stonebriar Center location quickly became one of the mall's top visited destinations that quarter. But there's a deeper financial layer here. Pop Mart's 2024 annual report revealed retail store revenue jumped 119.9% in the first half of 2025. America's region revenue skyrocketed 1,142.3% year-on-year, with store counts rising from 10 to 41 locations across North America. Those numbers impressed Texas mall operators, many of whom were struggling to replace legacy tenants like Sears or Forever 21. To them, Pop Mart wasn't just a novelty. It was an opportunity to reset how leases are measured. Instead of focusing on clothing or electronics, malls could now monetize collector engagement. But there's a catch. Engagement isn't always permanent. The lease strategy and landlord appeal Texas malls were among the hardest hit by e-commerce, with once vibrant retail corridors becoming ghost floors. By 2025, though, the picture looked better. Dallas-Fort Worth vacancy, 4.8%. Houston, 5.5%. Austin, 3.4%. San Antonio, 4.0%. Those numbers from partners. Real Estate's 2025 Retail Landscape Report show landlords are clawing back occupancy through experience retail. That's exactly where Pop Mart fits in. At Houston's Baybrook Mall, Pop Mart's 4th Texas store opened to long lines and live coverage from Houston Chronicle. Families camped out before dawn, hoping to score limited edition Labubu figures, the kind that resell online for triple retail price. For Baybrook's landlord, this opening translated to an estimated 15% increase in adjacent tenant traffic that weekend. As one local retail consultant put it, Pop Mart is the kind of anchor that doesn't look like an anchor. The Labubu effect. Labubu isn't just a toy. It's a character with mythology, artistry, and scarcity baked in. Created by Hong Kong artist Kasing Lung, Labubu's mischievous, almost eerie grin has become a cultural symbol in Asia, and now, America. The design's power lies in what psychologists call the collector's completion loop. Once buyers open one box, they want the whole set. Pop Mart's CEO Wang Ning has admitted, "We're not just selling figures, we're selling anticipation." And that anticipation translates into consistent mall traffic. Collectors return every month for new drops. The Frisco store, for example, sees nearly 40% repeat visitors within the same quarter, a figure most retailers can only dream of. But as Governor Abbott's economic advisors privately acknowledge, retail built purely on hype can become a double-edged sword. The same crowd that made Pop Mart a phenomenon could vanish when the next craze hits. The tipping point. The success of Pop Mart's Texas expansion triggered a wave of copycats. Smaller mystery box brands leasing spots in Dallas and Houston malls. Suddenly, everyone wanted to replicate the Labubu magic. Yet, by late 2025, mall managers began noticing a troubling trend. High initial sales, then steep drop-offs. The novelty-driven tenants generated opening week chaos, but many struggled to maintain consistent foot traffic. Governor Abbott's office, which tracks regional retail tax receipts, flagged a volatility pattern in Q3 reports. Short-term spikes, long-term flattening. In a business climate built on steady property tax flow, that volatility worries local governments. As one state economic analyst put it, "We're seeing excitement-driven leases, but not necessarily stability." That's not how you sustain mall ecosystems. Governor Abbott panics. Okay, panics might be dramatic, but the concern is real. When Governor Abbott addressed the Texas Economic Summit in late 2025, he warned that rapid consumer cycles and fleeting trends could test the resilience of local retail markets. He didn't mention Pop Mart by name, but context made it clear. Behind the scenes, Texas's Economic Development Council circulated a memo urging landlords to diversify tenants beyond collectible-driven retail. It was the state's subtle acknowledgement that if hype collapses, so can mall valuations, and with them, commercial property tax bases that fund schools and infrastructure. In simple terms, if Labubu fever fades, Texas's shiny retail rebound could stumble. Consumer behavior shift. Pop Mart's numbers remain strong and factual. 13.04 billion renminbi, approximately 1.8 billion US dollars. Total 2024 revenue, up 106.9% year-on-year. International revenue 5.07 billion renminbi, up 375.2%. Plush toy category growth 1,289%, totaling 2.83 billion renminbi. The Monsters, Labubu series, accounted for 3.04 billion renminbi, about 23% of total sales. Those are not guesses. They're verified figures from Pop Mart's 2024 financials. But what those numbers reveal is dependence. Pop Mart's global performance leans heavily on a handful of IPs, especially Labubu. If demand cools, so could expansion plans in the Americas. That's where Texas becomes ground zero for a bigger question. Can the state's booming retail real estate sector handle a possible Labubu collapse without losing investor confidence? Governor Abbott framed it best in his 2025 budget address. Texas thrives on innovation, but we must balance it with endurance. The key to economic growth isn't just what's new. It's what lasts. Real estate valuation ripple effect. When a brand like Pop Mart enters a high-traffic mall, it doesn't just fill space. It can shift valuation metrics. For example, the company's 2025 interim report reveals that for the 6 months ended June 30th, 2025, it achieved a profit of 4,574,368,000 yuan, approximately 634 million US dollars, attributable to owners compared with renminbi 921,333,000 in the same period last year. Meanwhile, retail store sales in the PRC alone rose 119.9% year-on-year. For landlords in Texas, these figures suggest that a tenant with that level of growth can justify premium rent, provided the store replicates that success locally. In leasing news, Pop Mart signed a 10-year lease for a U.S. flagship 7,000 square foot store in Times Square, 1,540 Broadway, in October 2025. While that's NYC, it sets a benchmark for Texas malls. The expectation is that a Pop Mart store can act as a destination anchor, shifting traffic and, by extension, increasing the value of surrounding units. The fact that Pop Mart is now opening at premium locations underscores the magnitude of the opportunity, but also raises the bar for performance. The everyday Texans caught in the wave. For most Texans, the Labubu craze isn't about collectibles. It's about the cost of living behind the mall glass. While Pop Mart stores pulled record crowds, many of the employees helping to sell those boxes earn under $17 an hour, barely covering rent that's climbed over 21% since 2020 across Dallas, Fort Worth, and Houston. Bureau of Labor Statistics and Zillow. In Houston, weekend drop events meant more overtime, but rising gas prices and childcare erased most of those gains. Local families love the excitement, but few can afford to take part. One mother told Community Impact, "My daughter loves Labubu, but $25 a box? That's groceries." Pop Mart has revived mall foot traffic, but it hasn't revived household budgets. As one of Governor Abbott's own economic development memos quietly admitted, retail revival must reach the workers, not just the developers. The Labubu boom may glitter on social media, yet behind it, many Texans still weigh every dollar between rent, fuel, and food. Governor Abbott panics. Okay, panics might be dramatic, but the concern is real. When Governor Abbott addressed the Texas Economic Summit in late 2025, he warned that rapid consumer cycles and fleeting trends could test the resilience of local retail markets. He didn't mention Pop Mart by name, but context made it clear. Behind the scenes, Texas's Economic Development Council circulated a memo urging landlords to diversify tenants beyond collectible-driven retail. It was the state's subtle acknowledgement that if hype collapses, so can mall valuations, and with them, commercial property tax bases that fund schools and infrastructure. In simple terms, if Labubu fever fades, Texas's shiny retail rebound could stumble. How mall REITs are responding. Retail real estate investment trusts, REITs, and mall owners in Texas are watching this phenomenon closely. The low vacancy rates in Texas markets add context. Dallas-Fort Worth approximately 4.8%, Houston approximately 5.5% as of 2025. In that environment, an unconventional tenant like Pop Mart with historically strong performance metrics globally becomes highly attractive. In some cases, landlords have offered shorter initial lease terms and built-in performance review points, although specific Texas lease terms aren't publicly disclosed. REIT commentary suggests that adding experience-based tenants can improve dwell time and cross-shopping behavior. According to industry commentary, Pop Mart's U.S. website users grew to 2.7 million in June 2025, up nearly 4 times since March 2025. Indicating increasing U.S. brand awareness. For mall owners, that kind of online traction translates into physical foot traffic potential. That said, REITs also flag tenant diversification and renewal risk as crucial, because when lease expirations come, performance must justify renewal. Pop Mart's risk disclosures. Pop Mart's own financial disclosures underscore that although growth is strong, risks are acknowledged. For H1 2025, the company recognized that its overseas operations revenue increased from 1,036,600,000 yuan to 5,593,464,000 yuan, a year-on-year growth of 429.0%. But along with growth, the company notes dependency on IP, intellectual property, and the blind box model, which multiple analysts, for example on Seeking Alpha, have described as narrowly based and sensitive to novelty fatigue. Moreover, reports such as A Invest's flagged quality and counterfeiting issues as emerging difficulties. From a real estate standpoint, this means that a mall leasing to Pop Mart is implicitly accepting some of those commercial risks. Performance must hold up for the leasing premium to be justified. Broader U.S. retail real estate shifts. What's happening in Texas is part of a larger U.S. and global trend. Retail real estate is evolving from commodity-based shopping to experience-based destinations. Pop Mart sits squarely in that shift. The fact that its U.S. site traffic quadrupled in a few months shows demand may be building. Moreover, its planned revenue target for 2025, over 30 billion renminbi, was 4.18 billion US dollars, signals aggressive expansion. For mall owners, brands that can grow rapidly aren't just tenants, they're strategic partners. In Texas, where malls are adapting to the e-commerce era, that change is especially pronounced. However, consistent performance across multiple markets still remains to be proven. For real estate investors, the shift is real, but so is the need for caution. Here's the summary. A Chinese pop culture toy brand propelled by the character Labubu has surged globally, with verified financial results showing strong growth. It has entered Texas, a booming retail real estate market under Governor Abbott's pro-business strategy. Mall operators see opportunity, small footprint, high traffic, viral appeal. But leasing to Pop Mart is not risk-free. The company itself discloses dependency on IP and novelty. Analysts flag quality and market saturation concerns. The performance of these stores in Texas will matter not just for toy fans, but for how retail real estate is valued in the era of experience consumption. For Texas malls and investors, the next major shift might not stem from offices or housing. It could begin with a 300-square-foot toy store featuring a blind box figure. And that makes every lease, every traffic bump, every renewal a real story of property strategy, not just pop culture. Thanks for watching. If this video opened your eyes, don't forget to comment. Please subscribe and like and hit subscribe for more real estate deep dives. Visit EstateScope on YouTube, youtube.com/estatescope. And always, stay alert, stay informed.